Hello. I was reviewing the results of your Chapter 3 tests and saw some problem areas that I wanted to spend some extra time reviewing. These topics, like accruals and deferrals, are very important because they'll be covered in Chapter 4 with the closing process, and you'll see again in future chapters throughout the course. The first are accruals and deferrals. Accruals are revenues and expenses that we need to recognize in the current accounting period, even if we haven't received cash or paid cash. The cash will come later, but we need to accrue or recognize now those revenues and expenses. One good example is accrued salaries. Let's say at your job, in the last week of the year, you work Monday through Friday, but you won't get paid for that week of work until next week, which is in January. From your company's perspective, they won't be paying cash for those wages until January, but they incurred the expense in December. And so it's very important that they accrue those wages in December. Another way of saying they record the expense now, even though they won't pay cash till later. And accrued interest is another example where it works the same way. If we have an interest payment due next accounting period, but it covers time that includes this accounting period, well, we need to accrue some of that interest expense and record it on the books this year, even if we won't pay that interest bill until later. Now, you can also have accrued revenue. If you do work in the current period, if you earn revenue in the current period, then your company needs to record that revenue in the current period, even if they won't get paid until the next accounting period. Deferrals are exactly the opposite. With a deferral, we may receive cash or we may pay cash now in the current accounting period, but we want to defer the recognition of revenue or expense until the future. And prepaid expenses like insurance are a good example of this. We pay for our insurance policy with cash up front, but we don't expense it yet. We go ahead and record it on the books as a prepaid expense, which is actually an asset, and we won't expense that until the future when we've used up that insurance policy. Another good example of deferred expenses is depreciation, and you guys seem to have some trouble with this one on your test too. Depreciation is when we record fixed assets, things like property, plant, and equipment, at their historical cost on the books. We record the cash now, but we won't expense those assets until later. We'll expense them evenly over their long, useful lives. So we record the asset now, the cash payment today, but we defer the recognition of the expense associated with that purchase until future periods. That's an example of a deferral. Now, when we record the depreciation, the expense, we have that contra asset, the other side of the entry, which is accumulated depreciation. And it's important to note that land is not depreciated. Is recorded at historical cost on the books as an asset, and we leave it there until it's sold. Now, I want you to keep studying these initial topics like debits and credits from Chapter 2, the accounting equation from Chapter 1, and these accruals and deferrals from Chapter 3. They're going to be important to the closing process in Chapter 4, and you'll see them again and again throughout the text.